Hello and welcome to this video. Here we're going to talk about Apple. We'll look at Apple on a daily basis, weekly basis, just to see what we can observe. So let's see what's been happening to Apple right now. Since forming a low in early January, you can see that it's been moving higher, making a series of higher lows. You can see the structure better on a 4-hour chart. So this is a 4-hour chart. You can see that since forming this low, you have higher low here, higher low here, higher low right here. And if Apple is to maintain this current structure, then we would expect to see another higher low at some point. And we'll discuss what that point might be. But you can clearly see that the structure right now is completely different from what we saw previously. And going back to the daily chart, you can see the structure of higher lows. Let's now look at the moving averages to see where the current price is in relation to the moving averages. So here are the moving averages. There are three of them. The black line is the 200-day moving average. The green line is the 20 EMA, and the yellow one is the 50 EMA. At the moment, you can see that price is above all three of them. So this is positive. You also notice that the two moving averages, the 20 and the 50, they have crossed and they've now started to move higher. So this is now different from what we saw in December, in October, November, December, when the two moving averages were moving lower. Now they've crossed and moving higher. So what we want to see is but so far they are below the 200-day moving average. So ideally what you want to see that these moving averages go above the 200-day moving average. So that would be a bullish cross. If we look at the momentum indicators, we see that RSI is above the 50 level. So this black line right here is the 50 level. It went as high as 74, over 74 last week. It was overbought. So this week's pullback has released some of the overbought condition, but nonetheless it remains above the 50 level. So this is positive. If you look at MACD has now crossed above the zero line. So this is positive on a daily basis. RSI was in overbought area. So this pullback has released some of that overbought condition. So based on what I see, with price action, the moving averages, the momentum, it looks like that everything is more positive than negative. Now let's have a look at the weekly chart just to see what we can see. So again, you see that since forming a low in early January, we've had a strong run up on a weekly basis. Now, if you look at the line chart, you'll see the pattern a little bit clearly. You can see that it was making a series of higher lows, series of lower highs. So high right here, a lower high, a lower high, a lower high, and lower high. But this rally pushed it above the previous high. So these highs are on a closing basis. So it has invalidated the sequence of lower highs. So this is positive price action on a weekly basis. If you look at the momentum indicators, RSI is above the weekly 50 right now. You can see that a couple of times previously it had gone above the weekly 50, but then fell back below the weekly 50 right here in April. And then we had another situation where it had gone above the weekly 50, but then fell below the 50 level. And right here you can see the 50 level acted as a resistance. Right now it's above the 50. So the question is whether or not it can stay above the 50 level, or are we going to see something similar to what we saw in April and September. If you look at the MACD, you can see that MACD has crossed, but it is below the zero line. So the MACD is not yet in positive territory. RSI is, but MACD is not. And the price action, I would say, is positive because it has established a weekly higher high. So again, from a weekly perspective, it looks like the patterns are more positive than negative. So next, the question is, what can we expect going forward? So I'll discuss both the bullish case and the bearish case. Now let's bring in some horizontal levels on a weekly basis for reference. Now you'll see that I've got a line right here, top line, and we've got the bottom line. This top line and bottom line represents the high and the low. And this line right here is the midpoint. This is right here, which is around 142.50 is the midpoint of this range. You'll notice that this midpoint acted as a resistance right here. It acted as a support right here, support right here, support right here. So this midpoint is very important. This is where you expect to see battle between the bulls and the bears. You know, the bears would say that this is a counter trend rally. The bulls will say that this is the beginning of the new bull market for Apple. But this midpoint is a crucial area. The longer it stays below this midpoint, the more doubt it creates in the minds of the bulls that perhaps this is just a counter trend rally. If on the other hand, the bulls are able to push it above the midpoint and hold it there, the more doubt they can create in the minds of the bears that the bear market for this stock is over. So you can expect to see mind games being played at this level. And you can see some fake outs as we saw right here, even last week, where it goes slightly above the midpoint and falls back below. So we need to be careful at this level. So now let's discuss the bullish and bearish case. So I'll start off with the bearish case. The bearish case is that price remains below this midpoint. That's point number one. Point number two is RSI falls back below the 50 level, just like it did right here, Because when RSI remains below the 50 level, we generally see lower prices. You can see right here, when it fell below, we saw lower prices. Right here, it was below the 50 level, we saw lower prices. Now, if we see lower prices, what would be the levels that we want to see fall below? This line right here, which is around 138, 139, is an important level. You want to see price fall below this level. If price falls below this level, odds would then increase for a retracement back to this level. So this would be an important level for on a weekly time frame. So the bearish case would be the weekly price closes below this level. You can see this level acted as support right here. There was a lot of interaction with this level. So if price falls below this level, then odds would then increase for a retest of this level. And lastly, you want to see that MACD never goes above the zero line. MACD continues to remain below the zero line. So those would be the scenarios you want to see if you're bearish, that no close above the midpoint, RSI falls below the 50 level, price continues to move lower and closes below this level, and then that would increase odds, and MACD never goes above the zero line. So those would be the bearish scenario. Now let's talk about the bullish cases. Under the bullish case, what you want to see is there's been a strong run-up over the last 5-6 weeks now without any kind of pullback. So ideally what you want to see a shallow pullback on a weekly basis, establish a higher low on a weekly time frame, and then make a run at the midpoint. So we'll discuss, like, if there is a shallow pullback, what would be the ideal levels that it can pull back to. But nonetheless, you want to see some kind of structure develop. You see on the back here, there was some structure developing where it started to make lower highs, which indicated that there was some weakness developing. So if this rally was going to be the beginning of a bull run, then you want to see some structure develop on a weekly basis. So you want to see a shallow pullback and then move higher and then retest this midpoint. That's point number one. Point number two is you want to see that RSI remains above the 50. This is very, very important. Point number three, you want to see MACD continues to move higher and goes above the zero line. Those would be the conditions. Now let's talk about what would be the ideal level that a shallow pullback can happen. Now there are two levels that I want to discuss. One would be where this red line is. This red line is right now around 146, and the other one is this purple line, which is around 139. So I want to discuss both these two levels to see which one would be ideal. Now, from a weekly perspective, both of these levels would satisfy a weekly higher low. But we also need to consider other time frames like daily. From a daily perspective, which of these levels would be ideal? So if we go back to the daily basis, the first level was around 146. So if I bring in the horizontal levels again, so you can see 146 is where this red line is. Now, if we are to see a pullback to this level, the price will interact with the daily 200-day moving average, the daily 20 EMA. You can see the daily 20 EMA is rising. So by the time the price comes back to this level, the daily 20 EMA will come to around this level. So if the price pullbacks to this level, then it will find support, it will test these two levels, and if it holds and moves higher, it's not going to make any break of these moving averages. So to me, it looks like this is an ideal place, because here it would test the 200-day, it would test the 20 EMA, and then if it bounces off this level, that should be fine. The second level was around 139. 139 is where this purple line is. Now notice that if the price were to fall to this level, it will fall below the daily 200-day simple moving average, the daily 20 EMA, and the 50 EMA. So if the price comes down to this level, the daily picture will look more negative than positive. So looking at from a daily perspective, it looks like the shallow pullback could, the ideal place for the shallow pullback would be around 146, 147. You can also see there's quite a bit of structure right here as opposed to the 139. So coming back to the weekly perspective, under the bullish case, you want to see shallow pullback to this, where the red line is, and then establish a higher low on a weekly basis. You want to see RSI remain above 50, and you want to see continued improvement in MACD and eventually get back above the zero line. So that would be the bullish case. Well, thank you very much for watching the video.